Good afternoon, traders, and welcome to the Hot Stocks Outlook for October 21st, 2016. So we're quickly moving through yet another trading month, really just one more week of trading for the rest of October here. And what I want to demonstrate is how traders are able to continually, month after month, week after week, identify profitable trading opportunities, so where they really have the odds and probabilities on their side to help them make much better trading decisions day in and day out in the market. So I want to go ahead and look at a few of these opportunities. I have about 4 charts set up, but it's very important to understand how this technology of the VantagePoint Intermarket Analysis software works and how traders are able to identify these trending markets early so that they can make sure they really make the most out of each and every trading opportunity out there. So if we look here at Canadian Solar, symbol CSIQ, we'll go ahead and look at this through the market tree. And I want to go ahead and open up what's called the intermarkets here so we can actually demonstrate a little bit about this technology and what's going on under the hood to really help traders make those trading decisions. So if I click here, we see we have the intermarkets, and we need to look very, very closely here. Now, VantagePoint performs what's called intermarket analysis. So it's analyzing how other markets are driving, influencing, and impacting the target market. So that market that you're getting ready to trade. So in this example, the target market being Canadian Solar, right? So of these 30 intermarkets, these are the markets that are known to drive and influence that target market. But we're utilizing a very sophisticated approach, a type of technology known as neural networks. It's actually a type of artificial intelligence, and it's able to identify these very important relationships between markets. So there's actually 2 patents on this technology and how it's applied to this data. Those 2 patents are identifying each intermarket, so which intermarkets are known to influence the target market. But then you also have to understand to what effect is each one of these markets playing on that target market that you're getting ready to trade. So if we take a very close look at these intermarket relationships here, we can see we have things like technology ETFs, the US dollar index, foreign currencies, some of those bigger indexes and ETF groups. But the software is able to really identify a lot more of those subtle relationships. And this is what really trips up a lot of traders in the market when they're really not paying attention to a lot of these subtle market relationships that take place between other stocks. You see a lot of technology stocks, competing stocks like First Solar, so other solar companies here, transportation companies, healthcare, technology. So these are the types of relationships that a lot of traders really end up ignoring and do so at their peril. And it really trips them up as far as where are the real probabilities for this market moving forward, and where should I really adjust myself? How should I manage this trade, again, to make sure that you're making the most out of each one of these trading opportunities. So let's go ahead and get into the chart, though. That's really what's going on behind the scenes. This technology really generating predictive data that's built into these predictive indicators to, again, help traders make better trading decisions with much greater levels of accuracy here. So I'll go ahead and expand the chart here, and let's go ahead and focus on a few of these more recent opportunities here. Now, VantagePoint works off of end of day data. So you see that we have some daily bars and candles here, the green days being up days, red days or down days. But we have a black line and a blue line against the chart. Now, very, very simple here. Let's go through each one of these indicators. Now, the black line, guys, is a regular simple moving average. So simple moving average is a very, very basic indicator, really just summarizes what's happening in the market. So if you have a 10-day simple moving average, you just take the last 10 close prices, average them all, or add them all together, of those 10 days, and then divide by 10. And that's really the entire calculation that's going to go into plot that line. So all it's really doing is summarizing the past 10, 5, 15 days of price action. But it's only looking at those last recent trading days, and it's only looking at the target market. So it's really looking as if Canadian Solar trades in a bubble, and it really only summarizes what's already occurred as far as the price action goes. So that's really what's referred to as a lagging indicator, and really gives us no additional edge, really just summarizing existing known information in the marketplace. Now, the blue line that you see, guys, that is VantagePoint's proprietary predicted moving average. Now, for this value to be calculated, it's analyzing those 25 to 30 global market relationships. So looking at the S&P, the dollar index, technology ETF, other solar companies. And what it's doing and what we're essentially looking at here is a comparison between the actual moving average that we just explained, this black line, and this predicted moving average, that blue line. So before that line is generated, again, it's weighing all those relationships, the technology really doing all of that work, so that as a trader, we really just need to identify and really look for these opportunities where this blue line has crossed above or below the black line. Because what that represents is there's been a change or a shift in that overall trend direction, and now that predicted average prices from that predicted moving average are actually moving above, we see, the actual moving average. So that's what we really want to be looking for as traders, are these crossovers, and that helps us identify these trend changes in the market. Now, an important thing to keep in mind is that, remember, we're looking at a comparison between a predicted moving average and an actual. So the separation in the distance between those two values is very, very helpful. If the lines are right on top of each other, the blue and the black line, well, there's not much change between the prediction and the actual. So you're probably going to get a sideways market. If you have a lot of separation, though, like you see here in Canadian solar over some periods of time, that indicates that you're in a very, very strong trend, and you would want to look to, obviously, add to that position, continue that trading idea in line with that idea that that trend is going to continue there. Now, so let me go ahead, and that's the predicted moving average. Very, very simple to use. As long as that blue line remains above the black line, you want to go ahead and be long. It's still forecasting the market to move higher, and then vice versa. So whether you're long, whether you're short, easy to apply these tools to whichever markets you're trading, whatever your really style or approach is. Now, aside from those predicted moving averages, which are extremely accurate and effective, there's another indicator at the bottom here, and it's really the combination of both these indicators that really generate essentially this forecast. So traders can really know what to anticipate as far as price action over the next 2 or 3 trading days, and really help manage those positions more effectively here. So I'm going to go ahead and let me scroll my cursor so we can see the title here. But this indicator at the bottom, this green line, goes from a 1 to a 0, back up to a 1. Very binary output, can only be 1 or 0, yes or no, right or wrong. But what this indicator is the predicted neural index. So again, analyzing those intermarket relationships to then generate this highly predictive indicator here. Now, this neural index is a 48-hour indicator, or 2 trading candles is how you can think of it. But it's looking and really looking forward 2 days forward and anticipating short-term strength or weakness in the market. Now, our predicted moving averages, those are for direction. That's going to help us, know if we want to be a bull or a bear, if we're going up or down. But the neural index can alert us to, again, that short-term strength over that next 48 hours. So when you're trading off of that signal, you should really understand, hey, what should I expect over this next 48-hour trading period? Should I expect the market to, if it's in an uptrend, also move up over the next 48 hours? So whenever we have these crossovers, between that blue and the black line, you want to look down and make sure that you're getting that confirmation from that 48-hour indicator. And it really tells you that, look, not only has there been a trend shift, but expect that short-term strength here. So in this example here for Canadian solar, just a great opportunity to go ahead and get into the market. This was towards the end of last month, September. But you really want to have the tools that keep you in a trade like this. You see the market's moved up almost 24% in less than a month. We're not even a month in since you would have gotten into this market. And you can actually see just how effective the neural index is at really helping you anticipate what to expect in the market. And this can help you really make even more than that 24% to the upside here. You see the neural index pretty strongly up at a 1 during the crossover. But you see these situations where the neural index drops down to a 0 and really forecast, look, that short-term weakness in the market, right? You're getting these low lows as a trader. You want to be prepared to say, hey, there's going to be some weakness over the next 48 hours. But the bigger picture here, guys, is that huge separation saying this market is expected to move higher. Sure, expect some short-term weakness over the next couple of days, but really a great buying opportunity. Once this neural index gets straightened up again, the trend continues to move higher there. So let's go ahead and look at some additional opportunities here. But again, keeping this information in line and in your mind of how we use these predictive indicators to go ahead and trade an individual market or opportunity. So Lululemon, now, great opportunities to the upside in some stocks, but over the past couple months, the S&P's gone sideways. There's been great opportunities to be long and be short, really hedge that portfolio. But again, using the same approach of recognizing blue line below the black line, and look at all this weakness from the neural index over those 48-hour periods moving forward through time. So the software is saying, look, go ahead, look to short the market, buy some puts, be very defensive here. See the market move down about 38 trading days, 26%. So, if you're buying puts, or if you're just, happen to be long some of these markets, it's so important to have a tool that alerts you to, hey, now the market's starting to reverse. There's some weakness. Go ahead and get out of the market. Wait until there's a better opportunity to go ahead and start accumulating shares again. And something really interesting I wanted to point out here, as far as the move, really nice opportunity, 26%, about an $80 stock going down to 58, so really great just opportunity there. But look how effective these indicators are of alerting you to now the downtrend is coming. You see that blue and black line get right up against each other, right? And sure enough, you get sideways for those next days moving forward. I mean, this market's going almost nowhere, but look how weak this neural index is. So keeps alerting you to, look, any crossovers to the upside, that neural index is weak, saying, look, expect that weakness over the next 48 hours. Once you get that separation again at all, then you really want to be short, because that weakness really picks up in the marketplace. And you see that neural index helping you capture that whole move lower, forecasting, look, expect weaker prices over those subsequent 48-hour periods moving forward. So really great opportunity, about 25% to the downside, and a recent crossover to the upside. So in the same way that says, look, be short up here at $78, $80 a share, saying maybe an opportunity to buy down at 58. So certainly want to be short at 80 and buying at 58 if that's what the price action is going to present for us. So moving forward, a couple more opportunities here. Southwest Airlines. So again, want to be utilizing these predictive indicators, pay attention to these crossovers and really getting that confirmation from the neural index. But, to capture these moves, to capture these 20, 30, 40% moves in the market, you have to have the patience to hold on to your position. And so that's where VantagePoint makes a huge difference. We can see this crossover coming all the way back last week here in September, saying, look to get long Southwest. Now, we'd gotten a little bit of weakness in the marketplace. You see this dip coming down in the market here. For the most part, neural index is constantly up here at a 1, forecasting, those 48-hour windows to move higher. But look at the separation between the predicted moving average and the actual moving average. So at no point saying, get out of that long position, at no point saying short the market, and just an absolute ton of separation, even when you get this weakness in the market, not even close to a crossover, saying, look to trade this market higher. If you went ahead and bought at 37.50, you're not getting out of this market until that blue line crosses below and says, okay, that trend is over. Go ahead and look for something else to trade here. So we see Southwest so far, just a tremendous opportunity, essentially getting in at the recent low there, about 14% in just the past 20 trading days. So about a $5 per share, easily 1,000 share purchase, made about $5,000 on a single opportunity where the market really never really is pushed against you at all. I mean, almost immediately gets in profit and continues to move higher with these really aggressive candles higher on these up days here. Last opportunity here, Genuine Parts. And again, so important to stress this, when the S&P 500 is going sideways, there's not a lot of, really great trending activity in the market. In the equity markets, there are some great trends, but you want to go ahead and hedge those things. So if volatility really picks up, you're almost making money regardless. So we see here Genuine Parts, just like Lululemon, getting a very clear crossover to the downside, neural index strongly at a 0 there. And again, we see what happens here. This market kind of moving, sideways and down. Our neural index saying, expect some strength over those subsequent 48-hour periods. And sure, that's what you get, but the direction is down. And so, when you have the tools that are looking at these intermarket relationships, utilizing that information to plot these predictive indicators, you're going to know, hey, this is not the time to be buying, XYZ company, in this case, Genuine Parts here. It's really the time, if you're a trader, go ahead and short the market, buy puts, so that, on your long positions like Southwest and Canadian Solar, you're making money to the upside. But you even have opportunities where those probabilities are higher that the market's going to trend lower. And you see here in about 12 trading days, market's down about 9.5%. I mean, really just over the past 3 trading days here, markets moved down almost 10% there. So you don't want to be sitting around in markets when all of these factors from these predictive indicators are against you. I mean, it's just not going to work out very well. So, that's been the Hot Stocks Outlook for October 21st, 2016. Thank you guys for watching. Of course, leave your comments and questions, and have a great rest of the trading week. Good luck in the markets, and bye for now. Thanks.